Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 28th of December 2021. And yesterday we published a video entitled, Is Silver Heading for $30 or $17 next? And we know quite a few of you have commented on this and we thank you for that. For those who haven't had an opportunity to listen to it, we've produced a link below. Now in this video we quoted 4 different sources giving their position on where they saw silver prices heading out of 2021 and into 2022. Now today, we're looking at gold and are quoting only one source. One, because we want to keep the video relatively short, and because, quite frankly, it paints such an interesting picture, which neatly encapsulates what has happened to gold in 2021 and what may influence it moving forward into 2022. The author of this article is Jordan Eliseo of the Perth Mint. So let's take a look. Livewire article dated 22nd of December 2021. Inflation, rate hikes and Omicron. What's next for gold? Gold prices have continued to trade in a narrow range in December, with the precious metal oscillating around the $1,800 per ounce price point. Assuming there's no large move in the final trading days of the year, the gold market looks like it'll end 2021 almost where it started, with the US dollar down around 4% for the year so far, and the Australian dollar up 3%, as shown in the chart below. As highlighted above, precious metals started 2021 on the back foot, with declines of almost 10% seen in both the Australian and US dollar gold prices. Since the late March lows, the precious metal has climbed 14%, Australian dollar, and 7% US dollar, buoyed by rising inflationary concerns, with annualized consumer price increases in the United States rising from below 1.5% at the start of the year to 6.8% by November. A decline in real bond yields since late March has also supported gold in the past 9 months, though it has also faced serious headwinds in the form of a rising US dollar index, which is currently up 7% year to date, an uptick in global economic output, with OECD forecasts for global economic growth in 2021 rising from 4.2% to 5.7% across the year, and an incredibly strong rally in equities, with the S&P 500 up 23% year to date, complemented by record inflows into risk assets. Outflows from gold ETFs and a halving of net long positions in the gold futures market have also impacted gold's performance this year. This has occurred even as consumer demand has not only recovered from the COVID-induced hits seen in 2020, but exceeded figures seen in the first 3 quarters of 2019. And if you actually have a look at gold consumer demand on the chart, which I shall try and enlarge here on the screen, you can see that in quarter 1 to quarter 3 of 2019, the total is 1,630 tons. This is produced by the World Gold Council Perth Mint. In quarter 1 to quarter 3 2020, 1,185. 2021, 1,709. So the increase of 21 over 20 is 44%. Outlook. As we head towards 2022, gold looks delicately poised, with a range of factors likely to influence prices next year. Potential headwinds include the likelihood that US inflation rates will soon decelerate, that we will see at least 3 interest rate increases, with more to come in 2023, and that the US dollar could continue to push higher. That said, the fact gold didn't sell off last week suggests that the accelerated tapering of asset purchases and the more hawkish interest rate projections announced by the US Federal Reserve at its recent FOMC meeting were already priced in. On the positive side, expensive equity markets and the potential for correction may see gold find a safe haven bid, especially given the low nominal and negative real yield environment investors face when looking at sovereign debt markets. With markets already looking jittery, given the withdrawal of policy support, it would not take much to boost gold. The emergence of the Omicron variant and the lockdown response we're starting to see, as well as the continued energy crisis in Europe and heightened tensions between Russia and Ukraine, also represent potential tailwinds as we head into the new year. Gold may also benefit given the likelihood we'll see economic growth downgraded in the aftermath of the rejection of US President Joe Biden's $2 trillion Build Back Better plan. It should also be noted that while rising prices haven't led gold to deliver a positive return in 2021 so far, we think it's too early to say the precious metal has failed as an inflation hedge, as some have argued this year. Because while the Fed recently dropped the use of the word transitory, the market remains almost completely unconcerned that inflation is here to stay, with 5-year break-even inflation rates now sitting at 2.65%, while 10-year break-even inflation rates are below 2.4%. This leaves the market with the largest gap on record, 4.4%, between the current annual CPI rate, 6.8%, and the 10-year break-even inflation rate, as the chart below highlights. The only other time there has been a gap anywhere near this large was immediately before the global financial crisis hit. Given this backdrop, there is plenty of room for inflation to fall from current levels, yet still overshoot market expectations as we head into 2022. Finally, it's worth noting that gold has now worked through a roughly 50-month time period that has seen prices correct by almost 20% from peak to trough. Sentiment has also turned 180 degrees in this period, from near unanimous bullishness in Q3 2020 to a far more subdued outlook today, with a range of financial institutions releasing bearish gold forecasts in the last month. Their projections may yet prove accurate, but it is of such things market bottoms are made. The data above is current as of the 17th of December 2021, unless stated otherwise. End of article, and we shall comment on this. Jordan Eliseo very nicely paints quite an objective picture in this article, published on livemarkets.co.uk just before Christmas. There is no pompous rhetoric talking about gold prices going to the moon, but a calm reflection of how gold has performed so far, and perhaps some of the positive tailwinds which may cause it to rise further in 2022, while accepting that headwinds may also be present. In early January we shall be putting forward our price predictions, but in the meantime we'll share such articles with you as to prepare you and us for both sides of the argument, so that any investment or disinvestment decisions we may make are based on logic as opposed to just emotion. What are your thoughts? Do you agree with Jordan? Is he understating the case? Overstating the case? Please share your thoughts, but meanwhile do subscribe to our channel and press the bell sign so you're notified of our videos as and when they're published, and if you feel so desired, please give us a thumbs up. Until tomorrow's video, have a great day. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.